Hello, everyone. Hope you're doing fine. Let's go run some ads from our partners, and then we can go on.
Meet Cytachain, the world's most innovative crypto ecosystem. Cytachain simplifies DeFi for mainstream users and seamlessly integrates crypto into everyday life. Discover the endless possibilities with Cytachain's Layer 0 blockchain. Go and check them out, cytachain.com.
From meme to utility, Floki has it all. NFT metaverse game called Valhalla. Floki University, DeFi, charity, and shopping. Floki is governed by the people, for the people. Floki, together, there is no stopping us.
Lattice is a Layer 2 network powering the next generation of decentralized applications. Everything we need all in one. Permissionless, frictionless, and boundless. Go and check them out. Metis.io.
Have you ever wanted to invest in real estate but never had the means to do it before? With Credify, your opportunity has arrived. With as little as $100, you can tap into a whole new world of reliable loans backed by a range of real-world assets, including real estate, future receivables, and more.
Hello, guys. Hope everyone's doing fine. Let us know in the chats where are you looking us from. So today is a very special day. I will be resuming my live streams, and today we are going to see my system. I'm going to show you guys how I scan the markets, how I look at Bitcoin, what are my thoughts on Bitcoin and Ethereum at the moment. If you guys have some special suggestions of certain coins or assets you want me to screen, then leave it on the chats. I'm really happy to be here, and let's start. So let's go to see Bitcoin chart. It's kind of weird. All right, here we are. Okay, so as you can see, I have the daily chart on Bitcoin. Today I'm going to share my thoughts. Pretty simple, pretty straightforward. As you can see, I have my volume levels over here. Many of you must wonder what are volume levels, right? So this is kind of my proprietary strategy. This is calculated using a formula, an algorithmic formula, to be able to find the levels, support and resistance levels for any asset. This way, we take out the discretionary way to find these levels that we almost all of us use. Like we can find support and resistance everywhere. So using this algorithm, basically what I can do is finding the most liquid levels based on volume profile, based on the pivot point formula, and based on VWAPs to find the best levels for me to be able to interact with the market. All right. So as you can see, I have several levels here, 73K, 71, 65K, 56, and so on. The next level for Bitcoin to break above 73K will be 81K. It's interesting, actually, because the quarterly VWAP and the monthly VWAP are still showing a strong bullish trend here. For now, Bitcoin is bouncing from 65K B level. This is a yearly calculated B level, but it's not enough. Like this candle that we're having right now, the weekly candle is going to close in about 55 minutes from now. It's not enough for me to tell that we're going to bounce here. Maybe we might have some kind of range bound over here. We don't really know. But the fact is that Bitcoin rejected 73K, and it rejected it quite hard. And we need this kind of flush in the market at the moment because of the greed that we're having. As you can see, we have a lot of space to fill within the market. All of these inefficiencies that the bull market leaves, normally they get filled eventually. I'm not saying that we're going to have a 50 or 70, 90% correction from now, but we need to make sure to be aware of this. As I told you guys, my main confluence when I see trends is for the daily chart, for the macro chart, is the quarterly VWAP and the monthly VWAP, as you can see here. All right, so I use this one. It's pretty accurate. I really like it. It's not everything that I use to to actually spot the trend, because market structure, price action is equally as important as all of these indicators that are basically based and calculated on price and volume. All right. So as you can see by the history of these crosses with the rolling VWAPs, it's very interesting how they have marked bullish momentum, like we can see over here. Let me mark it down. With this cross, we basically ended up the bearish market, right? Then we have this cross over here that was basically a fake out, as we can see here, a consolidation. It's normal to have this kind of stuff when we are using indicators. That's why we also rely on price action. So when the market is ranging, almost most trend following indicators are going to get confused. All right. So this way you normally get trapped in range bounds, right? So you are shorting the support and you are longing the resistance, right? But that's something that is pretty normal when we use trend following strategies like mine. In several others, for example, like BPRO, when you use BPRO and you use trend followers like the trailer, you might be long in the top and you might be short in the bottom, but it is what it is. All those losses will be erased if you follow the trend when the time is due, right? So let me see in the comments if we have something. Nice to hear you, everyone. Dov from Canada, Jamaica, Atlanta, Florida. That's amazing to see you guys. It's a pleasure for me to be able to share this with you. All right, so let's continue. Let's continue with this. I'm going to show you guys how I calculate these bill levels with Ethereum, all right? Because I already did the Bitcoin ones, so you guys can have it here. As well, you can also have my intraday bill levels. Make sure don't copy them right now, because they are going to change after the weekly closing. We're going to have new intraday bill levels, which are the 1 hour chart one. As you can see, weekly bill level, daily bill level, and we have on the daily chart the monthly bill level, right? So you can copy the monthly bill levels because they are going to change at the end of the month. This is why I created this, basically because the market is dynamic and we need to be dynamic as a market. So every single support or resistance level need also to be dynamic, because volatility is never the same, price is never the same, the macroeconomic environment is never the same. So as the price is dynamic, we also need to be dynamic with all of the indicators that we are using. Indicators are not bad, but we have to use them just as confluences. At the end of the day, the triggers comes from price action. All right. So let's go to Ethereum chart. Let me know if you guys can see my Ethereum chart. Yeah. Okay. Let's go to the daily chart, and let me put this. All right. Let me turn everything off because you're going to see magic right now. Let's start here. Okay, we start with the monthly chart. As you can see, I'm using a rolling VWAP to be able to calculate, because I need three criteria to be able to have these volume levels. All right, I need three criteria. I need the high, I need the close, and I need the low. It's just like the pivot points formula, but using different type of data, basically. But we need the previous month data, because the current month is giving us erratic information because the candle hasn't closed yet, so nothing is yet to be seen here. All right, so the only reliable data that we have is the previous close of the previous monthly candle, the previous weekly candle, the previous daily candle. Okay, so what I'm going to do is I'm going to replay this chart, and I'm going to use this data over here. Okay, so as you can see, guys, I have my own calculator over here. Don't copy my formula, but you have it there. And I'm going to start putting my data over here. All right, so we have the high, which is 2360.1. 2360.1. I need the close, which is 1990.61. 1990.61. Okay, and we have the low, which is 1621.13. 16, 21, 13. All right, so as you can see, we have all of the levels for the macro chart, which in my case is the daily. All right, so what I'm going to do is I'm going to stop replaying. I'm going to go to the daily chart and start tracing my levels. All right, these levels are also going to be confluent with volume profile, and I'm going to show you guys how I do this. All right, so I'm going to start placing my labels based on what I have here. So my first level is 1991. You can literally copy these ones, or you can round that up, the number, because like round numbers are very important for price, because there's a lot of liquidity there, a lot of participants interacting around numbers. So if you want to put 1990, that's completely fine, because at the end of the day, support and resistance levels are not exact, and they are most considered as zones. All right, so we always have this margin of error that needs to be taken into consideration. Okay, so let's go to 1990. 1990, first level of, in this case, it's a support because it's below price. We have 2360. Start copying this, 2360, and you're going to see how these levels start aligning pretty nice with price. It may be unbelievable, but it works, and it works pretty nice. Okay, so we have 2730. We have 3099. I'm going to put 3100. Okay. Then we have 3469, 3470, no problem. 3470. Nice. As you can see, from previous month, the current price is bouncing from a monthly bid level calculated from a formula. So this is just amazing how accurate these levels are. We have 3838. I'm going to put 3840. Doesn't really maybe matter. 40. Okay, almost touched the top there. And at the moment, we're going just to put 4210 just for informational purposes. When we are talking about support and resistance, and when we are talking about levels, we never consider a level per se a level of support or resistance, only when price tells us what it is. All right, because right now this B level, this monthly B level, is acting as a support, right? But what about if just Ethereum goes down and doesn't respect this level, right? So let's not react to these levels as if they're going to be always respected, right? But let's rely on them when price interacts with them. That is the most important thing, and what we're going to look for. All right, so as we can see here, we have Ethereum. I have finished it basically with support and resistance levels for the daily chart. For the weekly and for the daily, is it's different, because instead of going to the monthly chart and checking the rolling VWAP, I'm going to use the weekly chart and then the daily chart. So basically my levels that I share with you guys on a daily basis are updated on a daily basis, on a weekly basis, on a monthly basis, because markets are dynamic. We need to be dynamic, and we need to understand that markets are never the same. All right, they may repeat, but history may repeat, but it's not going to be exactly as previously shown. All right, so as we can see here, let's check out the rolling VWAPs. The quarterly and monthly rolling VWAPs on Ethereum are also bullish. This is a pretty interesting level for Ethereum to bounce, actually, because we are bouncing from a monthly B level, and also from the this is the monthly rolling VWAP. So this would be a pretty interesting level for Ethereum to actually bounce from. Let's check out if we have some absorption on this candle. This is pretty awesome. I can share with this with you guys using the periodic volume profile. You basically put period one bar, because we want to see the point of control of every single bar. This is kind of a footprint chart to look for absorption and exhaustion in price, but we use them for a one candle. This is a pattern that normally repeats itself, and you can use this configuration. All right, you can use this configuration to know when we are witnessing absorption or exhaustion. when we witness absorption, basically we can find a lot of times in a trend or in a mean reversion environment that the point of control, the little line here, as it represents here, is going to be located at the wick of a candle, right? Because many participants are going to get trapped there. The point of control basically means where most volume was traded, right? So where most volume was traded and the candle is showing a different direction where most traders participated, then we have trapped liquidity there. We have absorption. That means that the market tried to move in certain direction, but there was something there. There was limit orders. There was stop orders preventing from the market to continue to that direction. All right, so that's pretty important, and I use it on a daily basis as well for my confirmations and for my personal trading. Let's go and check out with the volume profile and how these levels align with the volume profile. Because if you guys know about the auction market theory, then volume profile is a very useful tool to mark down support and resistance levels without using my formula, right? You can just go ahead and use these low volume nodes and high volume nodes over here to mark down your support and resistance levels. If I can show you guys right now, if you go to the weekly chart on Ethereum and you use this, if you use these low volume nodes and high volume nodes, support and resistance levels for any asset, it's going to be very confluent, because the auction market theory, what it says is basically that when price is interacting with a high volume node, it has two options. It either rejects it pretty hard, normally with naked points of control, or it starts rambling around. Because in high volume nodes, it means that there's a high volume of participants in the market in that price zone, that it's equilibrium zone for price, rather than when we face low volume nodes. Low volume nodes tend to be low liquidity, where price is going to move quickly. All right, it's either going to reject it pretty quickly, or it's going to trend very quickly. All right, so if you start using the volume profile as confluence for your price action and your support and resistance levels, is also going to work very nice. I used to do that, but I started creating my indicator for support and resistance, the one that I recently showed you, to find the support and resistance levels, which aligns pretty nicely with volume profile as well. So why I'm using volume profile? Let's go to Bitcoin, for example. I'm going to start volume profile over here. Okay, let's go, volume profile. So as you can see, the volume levels are catching up pretty nice with this high volume node over here. We have a high volume node. Sorry, guys. You can see here. Let me go to. Oh God, I hate reading view. Yeah, so okay, we have here. As you can see, we have a high volume node here, low volume node, high volume node, a little bit of noise here, but overall, this is a low volume node in which if price comes down here, it either rejects it pretty fast, or it goes straight towards the next value area, which is going to be this one over here. All right. So, but we don't have any support and resistance level over here, as you can see. And this is a very important level to take into consideration, because this could be a naked point of control as well that price might bounce from. But until price reaches that level, I'm pretty sure that the volume levels are going to update themselves on a monthly basis, and we are going to have a volume level over here for price to be able to reach that. Okay. So as you can see, we can align and we have confluence with the calculation of the formula for the support and resistance levels and with volume profile. So why am I expecting a range bound over here? Because we are on a high volume node. We can't expect nothing else at the moment. Or we have a bad news or something that we break down straightforward from support, all right? Or we accumulate some orders here. We accumulate some orders here until Bitcoin decides to form a pattern. It can be a triangle, it can be a falling wedge, it can be whatever type of pattern that we are not seeing at the moment, right? But when we see it, then we will have a direction and we will have a trade plan, basically, all right? So since we are in a range bound at the moment, what we have to trade? We have to trade and try to long the range lows, and we have to try to short the range highs. That's how it works. That's how trend following works, actually. If the trend is showing you a range, then that's the trend. If the trend is showing you a bullish trend, then that's the trend. And if the trend is showing you a bearish trend, then that's the trend. You don't have to go. It's better not to go against the trend, if you know what I mean. All right. So as you can see, I'm expecting a consolidation in between 73K.34, and I'm expecting this level to hold at 65K 160, possibly a range bound formation over here. Let's see how the weekly candle is looking at the moment. Yeah, so the weekly is basically a doji rejecting all-time high, at least on Bitcoin futures from Binance. This is an FPG. No, this is not an FPG. This is a failed auction. This is a failed swing because as you guys can see, the previous all-time high, we don't have any candle closure above this, which is completely normal. This doesn't mean that we are going to see Bitcoin die from here. We need to understand that a lot of people are taking profits here. They are taking profits, and a lot of people, it's aping in because they see all-time high and they want to market buy, right? So it's completely normal to see a consolidation here and even a correction, but this doesn't mean that we are going to have a breaking market structure. As you can see, for Bitcoin to start breaking market structure on the weekly chart, we need at least 2 weekly closures below this level and 2 weekly closures below this level over here, which are confluent also with the volume levels at 48K and 40K. All right, so we can easily have it could be a 25% correction from here, or even a 40% correction. Normally in Bitcoin bull runs, we have about like 20 or 30% corrections in between time, which is completely normal. These are times to buy when the market starts giving signs of reversing. All right. For now, the market is just giving us signs that it might stop a bit because this is a pretty strong rally that we had. As you can see, all straightforward up about, let's see, from here to here, we have a month and a half of just bullish candles, a little doji that doesn't mean anything really, a bit of consolidation. And before that, we had 1.5 months as well of only straight upwards, right? So we're about like 3 months or 4 months of just bullish price action, and this is not healthy for price action. This is not healthy for liquidity, and this is not healthy for a stable bull market to continue upside. All right, so it's very important to take this into consideration. So we might see a correction. It's very possible, and as you can see here, remember, guys, I talked to you about footprint charts, the point of control on the week, right? So these dojis, this little doji over here, that it's not closing above the previous all-time high, is showing us that we have absorption above the previous high, right? Above the previous all-time high and the new all-time high, which is extremely important for us to notice because this means that the market is going to slow down. How much time is it going to slow down? We don't know, but this is the time that we have to be very aware of how to accumulate enough Bitcoin for when it breaks to the upside. If it does, or if it doesn't, then we need to be cautious for a deeper correction in case we have it. All right. So let's continue with my system over here. Let's go to the daily chart. All right. Let me check in the comments if we have anything. Indeed, Auto Jam. The trend is your friend until it ends. Exactly, guys. So if you guys have any comment, if you are enjoying what we are looking at right now, just let me know in the chat. All right. So I can continue with showing you guys my strategy for at least for next week. Right. So I also do a lot of candle patterns. All right. So as you can see, this candle pattern doesn't mean anything really. It's just a normal bullish candle that is showing that 65K is holding at the moment. Otherwise, the most utilized candles that I constantly look for are the following. Inside bars, bullish and bearish. Well, let's just put it as engulfing candles, hammers, and shooting stars, and also pin bars. Right, so these are the only 4 candles I focus on, and I have my personal setups for every single setup that I see. So what I do is I normally use only 2 time frames to trade. If I want to swing trade, I will use the daily or the 10-hour chart for candle confirmations on my volume levels and look for the entries on certain parts on certain patterns, like the over and under pattern on the 1 hour chart, so I can reduce the risk to reward and have more opening for me to be able to catch the move, a bigger move than trying to trade the daily or 10-hour chart, right? Or if I want to scalp, like I'm currently doing right now, because I'm looking for a range bound market at the moment. I don't have like huge swings to trade from at the moment. So what I do is I look for the confirmation on the 1 hour chart, and then I trade it on the 10-minute chart. You can even trade it on the 1 minute, but I personally don't like the 1 minute chart because it's too messy. I don't like that. It's my personal trading style. I only trade from the 10-minute and nothing else below that. All right. So as I look for these candles, I also use them as confluence. I will go to the 10-hour chart over here. Okay, this is weird. Let me check this out. Possibly these levels. Yeah, these levels are not appearing over here. Let me save it. Okay, so these levels must now be fine to appear on the 10-hour chart as well. What is doing here? Okay, and we have this one as well. Let's go to the 10-hour chart, and we should be doing just fine. All right. Oh, we have the weekly levels appearing here. Give me a second, guys. So this is just a configuration mistake from my side. I don't want these levels to appear till the 9 hours. All right. These are the weekly levels. And for the weekly ones, I'm going to disappear them. Damn. We have this weekly over here. Okay. Weekly. I just want them out of the chart at the moment because I don't want you to be confused. And we're good. And we should only activate these 2 levels that are the main levels at the moment on hours, just from 10 hours above, and we're good to go. All right, so we go to the 10-hour chart. Let's go to this configuration of the charts over here. All right, why I use the 10-hour? Because it gives me early signals than the daily chart, right? Instead of sometimes I have the signal setups from the daily, or sometimes I use the 10-hour chart. That it also going to represent my risk that I'm going to take on every single trade that I take, right? So if I'm taking a trade from the 10-hour and looking for the trade setup on the 1 hour, I'm just risking 1% of my account. If I'm taking the trade from a daily confirmation, then I'm risking about 1.5 or 2% of my account. And if I am scalping and taking trades from the 1 hour chart and the 10-minute chart as the setup looker for, I'm basically risking just 0.25 or 0.5% of my account. This is how I manage my risk management, basically. This is because the higher the time frame, the most likely that the trade is going to go towards your direction, your desired direction, rather than the lower the time frame, you are most likely to have a lower win rate. All right. So this is why I try to use a different risk between time frames. All right. So since I'm using right now the 10-hour chart to look for confirmations, you can also see here that some candles are colored. All right. These candles that are colored are high relative volume candles. The ones that are purple, they are high relative volume candles, meaning that they are above 2.5 standards deviations from the mean. The volume is above from the mean, 2.5 above from the mean. And these are low relative volume candles that are below one standard deviation. Why do I use this? Basically, because the high relative volume candles normally tell me that a breakout is a real breakout or that the move is about to end. All right. And the low volume candles normally are candles that can be used very, very similar. If any of you guys use order blocks, I don't personally use order blocks, all right, but these low volume candles can be seen as order blocks because normally price goes back to fill these low volume spaces, all right, with high volume nodes. Okay, so in this case, let's see. I want to show you a setup, guys, so you can have an understanding of what I'm doing. All right. So as you can see, the quarterly and the monthly rolling VWAPs are bullish. All right. So basically, I'm just for swing trades at least. I'm just looking to long. Okay. And we have okay. So this haven't been filled yet. Let me check for a setup. I want to show you guys a quick setup. All right, so we have this. Remember about the candle formations? Okay, these candle formations, the inside bar, the bullish and bearish engulfing, the hammer candle, the shooting star, the pin bar, all have to be either high relative volume or low relative volume. Why? Because these candles that are above the standard deviation are showing me power. They are showing me volatility. They are showing me that either the price is going to start moving very quickly, or either the price is going to reverse very quickly, because we had a lot of volume, and especially in confluence with a periodic volume profile showing us the absorption, especially when you have, let's say, a pin bar or a shooting star or a hammer with high relative volume. Let's go and look for it. All right, for example, this one over here. All right. Remember, this is the 10-hour chart. We're looking for swing trades, so you're not going to find a swing trade every single day. All right. So this is basically, it can be considered either a shooting star or a bearish pin bar. All right. It has relative volume, and it also is showing me that absorption on the wick. This means that a lot of traders tried to long this breakout, right? And the market wasn't able to close above the high, which is also another confluence that we're having over here, right? The market wasn't able to close a candle closure above the high, and then we see the correction, right? So that's what I'm talking about, the confluence. Confluences are one of the most important things in trading. It's not about having just one thing that is telling you something, right? Just let's say I'm going to start going long because we have this. I'm going to start short in the market because we have the quarterly and monthly rolling B was crossed. Yeah, but the market structure is bullish. So for me to start going short, I need to make sure that the underlying indicator, which is price, is showing me, and it has confluence with what the rolling VWAPs are showing me. Does that make sense? So for me, let's say, for example, here, if I wanted to start looking for shorts in this section after we have the cross on rolling VWAPs, this basically we can consider this one as the previous low after the high, right? We need price to break below this level, right? Make a market structure shift and then print a lower high, and this is where I'm going to start looking for shorts. But that never happened, so I'm not going to start looking for shorts here because I'm most likely going to get trapped, and I'm neither looking for longs because price and indicators are having a divergence at the moment. All right, this is what a classical divergence looks like, and you have to be very aware of that. So as soon as I have the confirmation from the rolling VWAPs that we are bullish again, then this is my longs area, this is my longs area, and so on until right now. Okay, hope that all of this is making sense, guys. Let me erase all of these drawings that I'm making here. Let me check out some comments if we have some questions. Thank you, Bloody. Awesome, Michael. Hope it's been useful. Looking at the volume indicator and your comments, does the 60 or 62K area look like a good possible retracement? All right, so let's go check that out. 60 and 62K area. So we're talking about basically somewhere between this level. Yeah, it might work, right? For now, in my experience and in my strategy, what I look for is only for interaction with my volume levels. If price goes below here and possibly take this low and then bounce without even interacting with 56 or 57 volume level, it's going to be fine because the price is going to return here, possibly give me a pullback towards 65 B level and then continue to the upside, right? Or yeah, everything can happen. That's the most important thing to take into consideration when we are looking at markets. Everything can happen. We can predict what is going to happen. We just want to react on what is actually happening at the moment. Okay. Okay. So where is the spot? Where is the spot where you are gonna look for longing alts on longer term? All right. So in the longer term, we need to also look at, to answer this question, we also need to look at Bitcoin dominance, right? So for the longer term, if you mean long in alts, then I would look for a deeper correction on Bitcoin, because let's take a look on Bitcoin dominance at the moment. Go to the weekly chart to start from. Okay, so let me remove these drawings over here. All right. So we can clear, we also have volume profile here is not as accurate, but we can use areas of support and resistance here. We can see this low volume node edge that Bitcoin dominance is not being able to break above. And we have this level over here. So the main scenario that I will be looking to look for swing trades on alts, it would be for Bitcoin to pull back harder, right? Possibly in a slow and a steady way, not that aggressive, because right now Bitcoin dominance is high, okay? And for Bitcoin dominance to break below this channel, right? This way, we are going to confirm that we may be having an alt season that is not yet here, because to confirm that, let's go and take a look at Bitcoin chart. All right, let's go for the weekly chart, just for the macro purpose of this. All right, as you can see, this is still correcting. We're on a kind of a wedge formation to the downside, which is pretty interesting actually to see this this bullish flag, this pattern that it's building here. We're actually declining right now. This means that if Bitcoin falls at the moment, we're going to have a pretty big momentum on shorts on other alts. So at the moment, I'm not looking to go for swings on any altcoin at the moment, right? Until I look for possibly this breakout on Ethereum, Bitcoin. If we have the breakdown of Bitcoin dominance, below this range formation, that it's about like 140 days, it's quite interesting. And for Bitcoin either to start ranging, right? For Bitcoin either to start ranging or to start to correct more, okay? Because we want to see some blood on the streets. We want to see some correction from this rally on Bitcoin, and it's going to be interesting. At least if we have some range bound over here, we might see some good movement on altcoins as well. Okay, let me check if we have any other questions. All right, guys. So let's continue. I have to go to lower time frames as well. Okay, just to explain to you guys what I'm looking for on Bitcoin at the moment. If we go to the 1 hour chart, okay, The 1 hour chart is ranging right now. If we activate the volume profile as well, it's awesome. These volume levels are awesome, really. High volume node here. Okay, high volume node. What we are seeing on price action actually is confluent with the high volume node. You see, range bound here, rejection from range lows, and we are going towards range highs. All right. So what I'm looking for at the moment on the intraday chart, I'm actually looking for shorts, to be honest. Okay, because as you can see, I use a different combination of rolling VWAPs on the intraday chart. I use the weekly rolling VWAP and the daily rolling VWAP, and it's pretty damn accurate as well to show me the trend and to be confluent with the trend. And how I'm going to use this. So basically what I'm going to wait for is an interaction with this volume level, a high volume candle, or absorption that is showing me that momentum is ending or starting. Otherwise, Bitcoin is just going to break up towards the range highs of the daily chart, and possibly we are going to have a cross on the daily and weekly rolling WAPs, which is going to shift my focus on the intraday chart as well. But at the moment, I'm looking for shorts. All right, I will be looking for a rejection on this level, possibly on today's weekly opening or tomorrow's New York trading session. Right, we just have to be patient here. I will be looking for inside bars. I will be looking for bearish engulfings. I will be looking for shooting stars, or I will be looking for pin bars to reject this daily volume level. And then what I'm going to do is basically I will go to the 10-minute chart. All right, start looking for patterns. Start looking for patterns that are showing me something like this. So basically what I will be looking for is the confirmation on the 1 hour chart, right? Possibly take this high, or take this high. All of this is a liquidity for the upside movement, right? We have this, something like this, break of market structure, right? Pull back, and then we go back down again for the range lows of the intraday chart. And why I'm looking for shorts on the intraday chart, even though the higher time frame is bullish, because the intraday chart is showing me bearish momentum. So I'm just following the trend depending on the time frame, because basically I can be long. I could be long right now on Bitcoin, following the higher time frame trends on the 1 hour chart, and I can hedge myself. I can hedge my position on the 1 hour chart by looking for shorts on the 10-minute chart, because the 10-minute and the intraday chart are bearish at the moment. All right, so I will be doing a lot of these live streams every Sunday. All right, every Sunday we're going to see new things that you guys can apply on a daily basis for your trading. Hope this is being useful. And also I'm going to post on a daily basis my daily macro outlook for at least Bitcoin and Ethereum. All right, if I have some suggestions from you guys, if you want me to cover any certain altcoin that has good volume, I'm not going to cover meme coins. I'm not going to cover shit coins on my Twitter, especially because I don't want to build that kind of audience over there, right? But if you guys tell me like, okay, look at Chainlink, look at other type of great liquidity asset, I'm going to cover there with my macro updates, so you guys can copy my volume levels on a daily basis, look for what I'm teaching you here, all right, and trade on your own. Okay, you don't need to wait for me to post an official call if you already know what to do. Okay, so this is going to be a series of let's say classes or classrooms that we're going to do on Sundays, and hope you guys are enjoying it. And you can look at my Twitter and see for the macro updates. And if you are in the Discord, or if you want to join our Discord at the Birth Nest, I have my own channel in which you will find the intraday setups, which are very like most attractive for everyone, because you can trade basically every day from them. All right, so I think this is going to be all from me today. I hope you guys enjoyed. If you have any suggestion to me, just let me know in chats, let me know in the comments. I will make sure to work on that. And hope you guys have a nice end of the weekend and a nice great start of the week. All right. See you guys in a bit.